Good day, traders. In this video, we'll be talking to beginners and we'll be discussing structure breaks and liquidity grabs. So, structure breaks and liquidity grabs. When is it a structure break and when is it a liquidity grab? So, if you're completely new, you'll be wondering what is a structure break and what is a liquidity grab. Well, basically, a structure break is just the market moving in a direction, bullish or bearish, and it's breaking lower lows and making lower highs. As you can see in this example, we have a low, price breaks that low, creates a new lower low. Then price pushes up, creates a lower high, and then again price comes back down and breaks the previous structure. So we have a structure break, pushes towards the downside, creates a new lower low. And this is what we know as market structure, and this is how we read bearish trends and bullish trends. Now, there's a difference between a liquidity grab and a structure break, and when to know when what is. So you also have liquidity grabs. So if you have price moving up, maybe creating a double top, and then all of a sudden you get the spike towards the upside above those highs, and then you see price moving towards the downside. So classic retail traders, or classic how we're taught to trade, is that this is now resistance and that we should be selling in this area. So this is resistance because price has made a double top, and now all of a sudden you think you're going to sell over here. So you put your sell in here, you have your stop loss, you take profit, and then you get stopped out. Just to see price after being stopped out carries on in your direction. So this is what we refer to as a liquidity grab. And this happens on all the time frames, every day, and it happens to all of us. You're not unique if it happens to you. It's made so that we as traders get scared or we lose our money. So in this example that I'm going to show you here, we have this market moving towards the upside. Let's just take this away. And then all the way on the other side, maybe a few days ago, we have this area of interest to the left. Maybe we have a order block in this side. So we have something like this. Price moving, and then all of this price action happened in between. Something happened, we don't care, and then price started coming back up into this area. So this is a 4-hour time frame. So we can just put in here a 4H zone. Let's just put that in the center. So this is a 4H. So then as we continue along, we see price starts to push up into that area. Okay, that area. Price pushes up into that area. And we can see to the left, we have this double top. This is then our liquidity. We mark this out as liquidity, knowing that price then tapped into this area. Now, we first need to wait for the evidence that price is going to move towards the downside, because price could just easily just react from this area and start pushing towards the upside again. We don't know that this is not going to be just another high or low. How do we know it's going to break down towards the downside? Well, the most important thing is, one of the things is you can wait for the 4-hour to break towards the downside, break this structure so that we can see a structure break, as in the first example. And then we need to just wait for price to pull back again, creating a lower high, and then look for continuation. We then wait for price to make this move to back up towards the upside, and that is then where you would look for sells in this area before taking price lower towards the downside. So there's a lot going on. This is just a broad idea and a broad perspective of structure breaks and liquidity grabs. We're now going to look at some more examples. So let's say we've identified this a 4-hour level on the charts, and we are actually bearish. On the hard time frames, we are bearish, and we created this 4-hour level. So we moved up, we created, that's the wrong one. We moved up, we created this order block, this zone over here, we pushed up, and now we're waiting for price to come back down into this area to look for possible long trades to take back towards the upside. Now, when we see price coming to our level, there's a few things that we want to see happening in that area. We want to see price come into our area, show a reaction, maybe create a double bottom, show a reaction, then grab the liquidity below that double bottom, and then break the structure towards the upside over there, come back into the zone, and then look for the long. So that is one of our entry patterns that we trade. So if we break this down even further, we then have our liquidity. We have our liquidity over there. We have a structure break. And then we want to wait and see for price to return to a new formed order block in that area. Let's call this the 5 minute. We want to see then price moving into that 5 minute order block with our stops below and take profit wherever. This is not a entry and take profit video, just structure breaks and liquidity grab. So we have liquidity grab, check, so we can give that a check. We have a structure break, check, we can check that as well. And then we need to see price return into the initial range that expanded towards the upside that created that order block. And we have that checked as well. Now there's 3 confirmations for us to take a trade. If price did not break towards the upside, if this happened, then I would not look for a trade in this area. Then perhaps we should rather be looking for shorts, because now this is now very key. Then this could potentially be the liquidity. And if we maybe have a 5 minute order block up here as well, that's very clear. This could perhaps be the area where price then returns to and goes just a continuation and breaks the zone. So we need clear evidence that the zone is going to hold before looking for longs. Otherwise, we just follow the momentum and we look for shorts. Because there's then also, we have a small structure break over there. Price failed to keep this, so we had this order block over here. Price failed to hold it. So we maybe see price going a bit lower like this. Failed to hold it, pulled back. Then there was a structure break, but there was no order block in here, and then price just dumps towards the downside. And that is how we then follow the momentum, when we follow the current order flow of price action to take the trade towards the downside. So now we're just going to look at some examples, and that's it. We're going to wrap it up. I'm going to use the trade example of this week as an example, and I hope that it will give you some clarity. It doesn't have all the components in there, but it will give you an idea. Quickly going to go through it. We have an impulse, a correction move towards the downside, and then an impulse again. So there's our first structure break, and this is our evidence that we are potentially moving towards the upside. Then we want to see price coming back down to an order block. So the last down candle before the big move towards the upside is this one. That's the last down candle before the big move towards the upside that broke structure. So we can have some check boxes as well. We have a structure break. We have a down candle before the move that broke this structure. So we're starting to build the confluences for this trade to go towards the upside. Then we can drop to the lower time frames to see now when and where price will return to potentially. So we have this area, as now this whole area, but we also have this zone, this last down candle before the big up movement. So this is the last sell candle before the move that broke all of the structure. You can see it's a very clean move towards the upside that broke all of the structure. So now we're looking for price to return into this one of these areas. So we then wait and see how price returns down towards the downside. We can identify that we have a low over there. So potentially there is liquidity below this low. So mark it out. Potentially we have liquidity below this low. And it so happens price comes at the right time at exactly London open at 9 a.m. my time. Price comes down and it dumps and it taps into this area. So it could have happened it could have pushed into this area, it could have pushed into this area, but it just tapped that area. So we don't have to do anything yet. We don't have to do anything. We now first need to see the evidence that the price is going to move towards the upside. And we have it. We have that structure break. So here we can see that's our last high that was created. So for this now we're going to go on to the 5 minute just to see things a bit cleaner. Okay, so on the 5 minute. On the 5 minute, we see price grabbed the liquidity below this low and tapped into the order block. And then we looked for the evidence. We waited and we saw price come up, breaking this previous structure. If price did not break this structure, instead, if price just came up here, paused, and then started pushing down again, then I would not have looked for a trade, because then there was no evidence that price is going to go up higher and continue the trend towards the upside. So then we wait and see what happens. So now we see price came back down and we looked for the last sell candle before the move that broke structure. We have it over here. There's the last sell candle, like that. It broke structure towards the upside, so let's check it off. We have a sell candle, we have a high that needs to be broken, and we have that structure break. So we have all those confluences. Now we just need to wait for price to come back into this area. And again, we created a small medium term low. There's a low. So this low was taken out as liquidity. We took that low as liquidity and we tapped into this area. So this is then the entry. Stop loss just below the zone. And we have a higher time frame target towards the upside. But that's not important now. Just want to show you structure breaks and liquidity. And again, now we entered into this trade. But there were many opportunities to take along the way. Again, just immediately after that happened, look what we had over here. This is now the 1 minute. We have a structure break, clean structure break. And where does the price return to? It returns to the last sell candle before the buy. There you could have taken another trade. Price moved up, broke this structure. You can see the body's just closed it, just closed above it. And where did it return to? These last sell candles before the buy that broke this structure, and eventually that structure returned to it. There's your third entry over there. Massive push towards the upside. Price comes back down. What do we have over here? Structure break. The body closed above the high. Where did the price originate from? And we have all of these structure breaks in between. So we have this one. Let's make it like this. And there. All of that structure breaks, price breaking structure towards the upside. Impulse, strong momentum, and you see the corrective move. Price is reluctant to go towards the downside. Where does it return to? Well, there's two areas that it can return to. It's this last one. Last sell candle that pushed up, broke structure. You can see the accuracy. Price returned to that area again. So there's, I think, the fourth or fifth trade opportunity. So there were more opportunities, but we're just gonna stick to that. So there was a trade opportunity. There was a trade opportunity. There was a trade opportunity. 1, 2, 3, 4 trade opportunities. We had some more in here as well. And then price reached target beautifully. So you can see how you could have stacked all these trades by just understanding when price sweeps the liquidity and then breaks structure. Sweeps the liquidity, break structure. We sweep the liquidity, we break structure, we look for our entry. You don't need to enter down here because that's risky. You don't know prices if price is going to go up. You could be tapped in here. Wow, wonderful for you. You got a sniper entry, but then price pulls back. You in profit. You're very excited, and then price just dumps further. reaching for something deeper into the zone. We don't know. So we don't know exactly where price is going to stop. That's fine. We don't need to know where price is going to stop. As long as we can see price react from that area and then give us the evidence that it's going to go into the direction. It should start the new trend. And then we're just basically following the trend on the 5-minute. The same as you would do on the 1 hour or the 4 hour. Guys, that's it from me today. I hope this was insightful. Please leave a comment or a like below. Let me know what you thought and if you want more of this content. Have a great day.